Hi everyone, welcome to the Baguette Investor channel for a new video. I want to talk about the crash that happened. It was yesterday for me. I don't know in which time zone you are, but for me it was yesterday. And I want to talk to the people who got wrecked. So if you did not get wrecked in this crash, well, this video is not going to be for you. I'm going to talk about things you already know, so you might not want to watch this. But if you got wrecked on this drop, you might want to watch this video, and I'm going to give you some free information that I learned over my now 4 years of trading, so you can improve and never get wrecked again. This is really going to be precious information. So why do people get wrecked? Either, first possibility, they don't have a stop loss. So let's say you had FOMO into this Bitcoin breakout right there. You have FOMO, the breakout on Bitcoin and all altcoins. You got fucked by this huge 25% drop. Of course it bounced, but maybe you have panic sold at the bottom and you lost 25% of your whole portfolio and you're basically wrecked. It can be even more sometimes. I don't know if you remember this big drop right there, which was May 19th, 2021, which was a 50% drop. It was completely crazy what happened at that time on altcoins especially. But this is really something that can happen, that will happen most of the time on crypto. Corrections are so fast and so strong. There is a very simple explanation for that. It's called liquidity. On the upside and on the downside, when there are people taking big positions, if there is not enough liquidity on the other side to take the position, the price will move in huge ways. You can see that, for example, on small caps altcoins that have very low liquidity, that allow you to have crazy moves on the upside. You can see that those wicks are a symbol of low liquidity. It means that at that time somebody was buying this asset, but there was not enough people on the other side to sell it to the guy. So the price had to go up and up and up and up and up and up to meet people who were ready to sold the asset at that price. So the people buying had to go up and up and up and up and up in the market orders in order to get their order filled. Especially if you use if for example you use a market order on this kind of asset. Let's say you are a billionaire. I don't know why. Imagine that Jeff Bezos wants to put 0.01% of his net worth into this asset. What's gonna happen is gonna put, I don't know, 5 million in the market order, and the price is gonna jump 1,000 billion% because there is going to be no one wanted to sell him. There were not going to be sell orders, so the price will have to go up and up and up and up in order to meet someone who is ready to sell the asset at a certain price when you want to buy that. It's what happened on this correction right there. I don't know why. Maybe it's because of a news. Maybe it's because of not a news, but because of technical reasons. What really happens in this period is you have somebody or a few people, big hands, big money, whales, you will call it however you want, who sell a lot of their assets. After this huge run we had on altcoins, Bitcoin is the same thing. After this huge run, the altcoin index went up 140%. So that's a 140% run. So in these areas, people are looking at taking profits. You're in this big area. I did not think there going to be a correction before we meet the top of the markets, but there was the correction before. I really did not expect that. Anyway, people took their profits, cut a lot of their positions. So for example, let's say you have, I don't know, 50 million in Ethereum and you sell them on Binance. What's going to happen is you're going to drive so many selling liquidity, and you need to find people to buy the asset that you're selling. So it gives so much selling pressure, and because price is the balance between the selling forces and the buying forces, the price crashes so fast. And this is what happened. And the price crashing triggers other people to take their profits and to know it's time to exit the market. It triggers then panic sellers that see the price going down, and that panic driving the price even slower. It triggers algorithms that short the market and try to take a profit of this big flash crash, and it drives the price even lower. The price only turns back when you see people taking the opportunity to buy and to day trade this bounce, and it gives more. Maybe if we're in a bull market, this correction is going to be bought and the market's gonna bounce fast. But what you really need to know is that this kind of thing happens all the time on crypto. You can see that these corrections that you had right there, I'm gonna measure the moves. You can see that there it was 30%. There it was 30% again. There 30% again. There 36%. There 30%. There 60%. These corrections happen all the time on crypto. So you need to have a strategy that takes this volatility into account. You can't have this huge volatility on the upside where the altcoin market can double in 2 weeks, and you need to accept the volatility on the downside. So what do I do to prevent myself from blowing my account and losing all the money if a big drop like that happens? First thing, you need to have either a stop loss strategy, or if you use a no stop loss strategy, because I use two strategies, but if you use a no stop loss strategy, you need to manage how much money you enter. I have a no stop loss strategy. I will show you my positions at the moment, where I enter assets and secure my positions by selling 50% of the position when the price doubles. So it's very simple to understand. Let's take this trade on UUU. The 100% was here. So let's say I put $100 here. The price rises 100%. The value of my position doubles. My $100 are now worth $200. I sell half of my positions. I get back $100, which is the amount I invested, and I let $100 into the market, which is equal to the position I invested. So now my position is free. I got back what I invested, and the rest that is into the market is profits. It can go to zero overnight. I will keep my secured money. And what I do, I put the money I made into another position, so I have always 5 risky positions without a stop loss open, that it gives me the same risk all the time. So let's say I will have 5 times $500, so I always risk the same amount of money on the market. So if the market turns back on me overnight, it loses 25, 50, 75, 95%, I will have my risk managed. Of course, I do not have my risk managed on USDT. I'm working on thinking how to manage my risk with USDT risk, because it's a huge risk of the USDT going crazy. I don't know, maybe your USDT rates can drop and all your value is going to be lost. That's another problem. So this is my no stop loss strategy. Another stop loss strategy I have is when I use a stop loss. So you can see that there. I'm going to show you a trade that was triggered. This is, for example, a trade on VRA. I had my stop loss that was put back at my entry price. So I use a strategy when the price goes up a certain level, I don't let my stop loss at the previous level it was. I rise it to my entry price so I can open a new position. So I always have the same number. If the market conditions are good, I always have the same number of positions open with the stop loss at the normal level. When it reaches R1, when it reaches this area here, I will rise the stop loss from here to my entry price. So if the price goes back to my entry level, I'm taken out of the trade and I don't lose or don't make money. This allows me to, as the price progresses, I will secure my position and open a new one. So I always have the same amount of risk on the market. And what happened yesterday was that all my positions got triggered. All my trades that had their stop losses at their entry price got triggered, and all the trades that had their stop losses at the previous level got triggered. You can see this trade on Waves USDT. The price was going great, but it did not go up as much as I wanted to put the price at the stop loss at the entry price, and it went crazy and triggered my stop loss. So I got taken out of the position. It's the same for many of them. But you can see that I did not have all my money invested. I had 1, 2, 3, 4, 5 positions that were with the stop loss that were triggered. Other thing, you can choose the size of your position. It's very important to judge by the size of your position. And because I'm not really confident about my ability, I'm in a very bad streak of trading at the moment. I'm losing a lot of money, especially on stocks. I don't put a lot of money on my positions. I'm not confident. I'm in a bad mood. So When you know you're not doing that great, you reduce your position size. So if you click on this, you can see that my risk per trade is 0.50%. So if the price goes and triggers my stop loss, I will lose 0.50%. When you're very confident, you can go up to 1.5, 2% of risk per trade. But because I'm not confident, I'm 0.5. When I started practicing my strategy back in January, February 2021, I was playing with 0.1 and 0.2% of risk. Very, very little risk for very, very little confidence. So the less confident you are, the less money you should risk on the markets, because it means you're not good. And if you're not good, why would you put your hard-earned money like that? So this is really how to survive a crash, is really about managing your risk. And risk management, nobody talks about it in bull markets, but when corrections like this happen overnight or over a day, I don't know in which time zone you are, but let's say you wake up and you see this in the morning and you're like, okay, it's bad. If you bought around there, because I have some of my profits that will cover the losses I made, so I'm okay. My portfolio is going to be flat or a slight gain, slight loss. It's not important. But if you entered over here in FOMO mode and got fucked by this huge drop, you need to consider how to enter the market. It's no matter the timing, at any moment, if you take a position, you should think about, if overnight the market turns back on me, what happens? I should be okay going to sleep if you're doing overnight positions. Okay, that's all the thing I wanted to say. I hope this video brought you some useful information and will protect you in the case of other future crashes. There will be other crashes. There are going to be even deeper crashes. There can be 60% drop in one day in crypto. Remember that, especially on small caps. If you invest in small caps, you can be fucked overnight 95% because of for example, a protocol that gets hacked. Everybody gets out, you get rug pulled, it loses 95%, and you're bankrupt. That happens even to the best of us, even to big financial institutions. Manage your risk, be careful. I hope this video really helps some of you. Thank you so much for watching, and see you in the next videos. Goodbye.